We want your money. I love that intro, Dominic. Good morning to you. Dominic Alafaci is here from Collins House. Dominic, collinshouse.com. The fact is that you are on the line and we need to turn your microphone on so we can hear you.
How's that? Is that better?
There we go. That's the idea. How are you, Dominic?
I'm very well, thanks, Darren.
Hey, good news. The overnight markets look good.
Yeah, they came back a bit. Basically, in New York last night, the Dow Jones Industrial Average bounced back after Federal Reserve Chairman Jerome Powell said that the US economy continues to be in a good place. Now, that's very positive news. There's a lot of Trump derangement syndrome things people spinning, and they're just disappointed that he won, so they're taking the negative view, a lot of the commentators in the United States in the mainstream media, which is a shame. But anyway, the Dow Jones Industrial Average was over 0.5% higher in late trade a little while ago at 42,801 points, whilst the Nasdaq is almost 0.75% higher at 18,196, and the S&P 500 is over 0.5% higher at 5,770. Across the Atlantic, London's FTSE was flat, but the French CAC, German DAX and Italian MIB got a pasting last night, although they're still ahead over the last month. Gold is $9.10 lower at $2,917.50 a troy ounce, whilst West Texas Intermediate put on 66 cents to $76.02 a barrel, and Brent crude rose 87 cents to $70.33 a barrel. And the Aussie dollar is lower against the greenback in trading this morning and is currently buying 63.12 US cents, with the ASX 200 SPY 69 points higher following a big fall last night, or yesterday. We had a 1.8% fall where our market gave back 147 points to close the session at 7,948.
Excellent. The number 133693. Just before we start on anything, Grace has called through. We've got calls already, which is good. Grace, good morning to you.
Oh, good morning.
Hi, Grace. How can we help?
Oh, yes, thank you for taking my call. Just quick question. I'm 62 years old.
Mm-hmm.
Thinking of making a personal contribution into a super fund, like I think Vanguard. I've ranked Vanguard.
Mm-hmm.
Now, I just wanted to know, because I haven't had a super fund before and all that, so just wanted to know if I wanted to withdraw the money at a later stage, like say I want to go on a holiday or whatever, can I take it all out? And is there any questions they're going to ask me, like any conditions I need to
good question. Grace, are you retired?
Yes.
Okay, well, you can do whatever you like because you've satisfied a condition of release that you're over 60 years of age and you've retired. So if you put the money in and then you earn nice tax-free income on it, if you've got it in a pension mode...
This call will be recorded.
Sorry. Okay, we're still going there. You still there, Grace?
Press the button there, Grace.
Okay, so... So in essence, the answer is yes, you can put the money in. If you want to earn tax-free income inside the fund, have it in a pension mode. They'll pay you a small pension each year, minimum 4%. If you don't want the pension and you just want to leave it in lump sum mode, then you'll pay a little bit of tax inside the fund, but not much, and it's available at call.
There you go. Thanks, Grace. To Wayne, good morning.
Good morning, gentlemen. How are we?
Very well,
thanks,
Wayne.
Well, good, thanks. Just a quick question. I'm just about ready to retire, and I've been with one of the larger super industry funds, and I've been very happy with them.
Yep.
And I've always kept my growth options in the balance fund.
Yep.
I went and seen my accountant last year, and he's trying to nudge me towards going towards a self-managed super fund. My thought process is, and I just wanted to know what your thoughts are, balance fund's been returning me, say, roughly a 7% return over the last 15, 20 years. And I was just going to switch that to a pension phase and keep it in that. What's your thoughts?
That could be a very, very good strategy, Wayne. It really depends on two or three things. How big is your superannuation account balance?
I'm estimating it to be about 1.7.
Whoa.
Okay. If it's 1.7 million, you may actually be better off financially in terms of fees to have a self-managed super fund. That's probably what your accountant's saying, because there might be, say, $4,000 worth of fees for the admin, and you can buy investments quite cheaply inside the self-managed super fund and manage it yourself or have someone manage it for you. Whereas in the industry fund, you're paying a percentage which may actually work out to be higher. So you've got to do the maths and do the pros and cons to see what's in your best interest. The third thing I'd say is with industry funds, the balance fund usually, if it's one of the major ones, has got quite a large exposure to shares, property, and things we don't know much about. They're not as transparent, and they may, especially in the property area, where they may face some headwinds. I'm not saying they're bad; they're fantastic funds. I like them, but you need to make sure that asset allocation matches your risk tolerance. You need to do a risk tolerance report. So they're the three main things. A, it may be a great idea. Do it with your ears pinned back. Number two, look at the fees. You may actually save fees because you've got over 1.5 million. If you had $600,000, we wouldn't be saying that. And the third thing is make sure that the assets match your risk tolerance. So get some independent advice, and your accountant, if they're licensed, may be able to give you that.
Yeah, good luck, Wayne, and you're in a good position by the sounds of things there.
Yes.
The number 133693 if you'd like to talk to Dominic. All of the lines are free. You reckon you need to just sit back and take a deep breath when you're looking at your finances? Don't rush into anything.
Yeah, and especially we're just going to talk about if you're facing a divorce or you're going through that difficult situation. I think it's a difficult thing, and you need to really give some time to digest what the emotions you're experiencing are doing to you. That's the first thing. And you might need some advice from a counsellor if it's all too hard. But I often tell people, look, think about what your priorities are. Just write them down. What are the most important things for you? Then your objectives, I should say. Then prioritise them. Which is the most important of these 7 things you've written down? So that might be buy a house to live in, or it might be go on a holiday or pay off a mortgage, whatever those things are. So think about what's important to you. It's tough when you're under pressure.
Yeah.
Write those objectives down and then prioritise them. And if you're seeing a lawyer for a family law matter, perhaps get your financial advisor involved at the beginning, because he or she may be able to put you in a position that's in your best interest when you're doing the swapping of chess pieces and the domino. That's not the correct word, I think. When you're dividing up the pie, there might be an advantage for you to get a certain type of part of the pie.
Yeah, interesting. Brenda has called through. Hi, Brenda. How you doing?
Good. You?
Good.
How can we help, Brenda?
I lost both my parents
Oh, I'm sorry to hear that.
recently. Yeah. So the house, when we eventually sell, we don't pay tax on that. Is that correct?
Usually if you sell it within the prescribed period, which is a couple of years, if it was their principal place of residence and they never rented it out beforehand or anything like that, it'll be tax-free.
But my mum's got some land, just a block of land.
Yes.
She doesn't earn any money. They've never earned any money from it. If we sell that in the period, like when we sell the home,
it may be
do we have to pay capital?
If it was purchased before the 19th of September 1985, then it is tax-free. But if it wasn't purchased in that date, the capital gains tax time bomb starts ticking at the date of death. So the pent-up capital gain will be put on, half of it will be put on your tax return if you're, say, the single beneficiary. So you bought something for $100,000, it's worth $300, let's say. There's a $200,000 gain in this simple example. Half of that, $100,000, will go on your income tax return. So if you're paying 30 cents in the dollar, you'll probably pay $30,000 tax on the $300,000 sale. But please get some personal advice. This is just back of the envelope stuff today.
Thanks for the call, Brenda. Appreciate it. More calls coming up. Dominic Alafaci is here from Collins House.
Can't see any of them. Where
Christine, good morning.
Oh, hi. Sorry. Look, oh God, where do I start? Look, I've got over 300,000 with Australian Super, and and don't access it because I'm on a pension. I've not needed it,
Right.
and I just like it going. I like watching it go up.
Yes, yep.
But unfortunately, the last 2 or 3 weeks, all I'm doing is seeing it go down, 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 and I'm really disappointed, and I'm not quite sure what to do. But I'm able to withdraw it all if I want to, and just stick it in the bank. I mean,
Well, Christine, the first thing you've got to do, as I said to the previous caller, is we don't know what sort of food satisfies your palate. Do you like spicy food? Do you like plain food? Do you like meat? Are you vegetarian? So what you have to do is do a risk tolerance report. Look, if you go to collinshouse.com, you can do one for free. There's a risk tolerance report. Send me an email at collinshouse.com and I'll send you the risk tolerance report. That'll tell you what the best blend of investments are for you so you don't have to worry. So you're able to cope with the fluctuations on a monthly or a
And
weekly
sit back
basis.
and relax.
You might be in the wrong restaurant.
I love your analogies.
You might need to go to the vegetarian
You
one.
need to get down to Chinatown.
Oh, yeah, at Red Emperor. We had Red Emperor before we went to sea, and then there were none.
And then there were none.
On your
Great
reckon,
show.
oh,
See you,
absolutely
Dominic.
brilliant.
Phones not